Good morning. I'm here this morning at Norton Rose Fulbright here in Brussels for an event we're hosting with Norton Rose Fulbright on crypto asset regulation. And I'm delighted to be joined this morning by Jonathan Herbst, who's the Global Head of Financial Services Regulation at Norton Rose Fulbright. Morning, Jonathan.
Morning.
Thank you for having us and for speaking on the panel today.
It's a pleasure.
On crypto assets, Jonathan, so both the EU and the UK see regulation of crypto assets as a priority. What are they both trying to do? What are the main features of their proposed regimes?
Well, the first thing is they're going to bring in, ultimately, pretty much all crypto assets, with certain exceptions, into the framework of regulation. The sort of regulation is pretty familiar, key concepts. You know, if you're issuing, you're doing custody, you're doing dealing, or indeed running a market, you will be regulated in some form or another. And there'll be a number of concepts that flow from that. The key ones being disclosures, what kind of disclosures will there be, making sure there's no manipulation, and just generally creating a sort of framework for making sure that people's assets are safe, in inverted commas.
And what kind of products does this catch then? It's things like Bitcoin? Is it, we hear talk about tokenization? Yeah. Decentralized finance, DeFi.
Yeah. So you're getting into kind of technical territory, but basically it'll be all of the sorts of crypto coins, assets that people have that are popular in the market. There will be some exceptions, so those sort of artwork type scenarios, they'll be probably excluded, and one or two others that are not transferable in some form. There's sort of technical terminology around that, but most of the tradable crypto will all be in scope. The only question will be how quickly they'll be in scope, and there are slight differences in how they're going about that.
Lawyers always tell me, look at Article 1, the definition, before you look at the detail of any regulation. So the EU's got MiCA, as they call it, in place.
Yes.
But not in force,
yes.
But coming. The UK is working on similar regulation. How comparable and similar do you think they will be in the end?
Yes, a few things to say. Firstly, there's a difference in timing. So, MiCA is for real at the end of this year. There are some transitionals, but basically it's coming in. And that will cover pretty much all of the instruments we've just talked about. The UK is a bit slower. The UK is doing it in two phases. It's dealing with a limited category of those that are tied to currencies directly. There are stable coin in the technical terminology, and then the others will follow in a sort of phase two. That should be reasonably quick, but there's a difference in timing. In terms of approach, there are a couple of differences and there are lots of similarities. I think the differences get a bit techie, but the EU's got this sort of new regime completely, MiCA. The UK is building out from our existing regulated activities order and the designated activities regime. I think we sort of end in the same place broadly, but technically how they go about it is different. In terms of what they are trying to achieve, it is very similar, and indeed the concepts are very similar. As always, though, the devil will be in the detail, and there's the sort of so-called level 2 in the EU, and all the stuff the FCA's already brought out a discussion paper. So I think we'll have to see whether they are the same, identical, or subtly different, and that remains to be seen.
And will there be any cross-border activity? Let's assume they are very similar.
Yes.
Does that lead to any cross-border activity?
It's a really interesting question. So first thing to say is, as many who listen to this will know, the UK historically has had a very open regime, the so-called overseas person exclusion. That's not the case here. In fact, the UK cannot look across at the EU and say, you've got a closed market and we've got an open market. It's going to be a much more level playing field, if I can put it like that. Now, how will it work for cross-border? Well, the first thing to say is, in both regimes, basically, unless it's reverse solicited, in fact that's an EU concept, essentially you're going to need to be regulated. The question, and which is a really difficult question, is what does that mean for a so-called third country firm if you're outside the EU or outside the UK? And I think the current view, at least with the EU, is you'd have to set up an EU entity, probably. It's a little ambiguous, but that's probably the right view. And in the UK, although the Treasury has been talking about the idea of a branch of a third country entity possibly being able to be regulated, that remains to be seen. So I think for the UK it's a big change. I mean, the EU has had this approach in other areas. For the UK this is a big change because it's not the kind of classic open borders approach. It's very much if you are doing business with UK customers in crypto, you will need to have some form of regulation in 9 times out of 10.
So we'll come back to this in 2 or 3 years' time, Jonathan.
Absolutely. Yeah. Maybe a little less. I mean, I think the UK will get on with it. The question is the exact timing.
Great. Okay, thank you, Jonathan, very much. Thank
Pleasure.
you again for having us here. Thank you for joining us.
Thank you.